You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the Flowmaster Schwartz from CBOE. The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is Thursday. It is noon Central. It is 1 p.m. Eastern. Do you know what's popping off in these crazy Fed-driven markets we're all living through together? Well, I guess let's find out, shall we? Because it is time for your bi-weekly options extravaganza, known around the globe as the Option Block. My name, of course, Mark Longo from the THE, OptionsInsider.com, as well as from the network upon which so many of you have been binging and mainlining all week long. A lot of great content coming at you. We had a double options boot camp extravaganza yesterday. Our buddy Mr. Matt from ORATS joined us to break down all sorts of fun topics, including something you folks have been asking for forever, the great covered call debate. At the end of the day, is it even worth doing those right now? All sorts of fun, so check that out over there. If you're on the pro side, you got to hear it live yesterday, as well as a double header of pro Q&A sessions the day before. Man, it's just an embarrassment of riches over there in pro land right now. So if you're not checking it out, what are you doing? TheOptionsInsider.com/pro. We are just overwhelming you, deluging you with content over there on the pro feed. Only one place to get it, TheOptionsInsider.com/pro. The place to go to learn more. Of course, that'll get you, of course, live access. So you can heckle everyone here on the show. You can enjoy options oddities, get great giveaways. And again, like we said, a whole bunch of double headers came at you live this week, and they're waiting for you over there on the pro feed right now. TheOptionsInsider.com/pro as we go around the horn to see who's joining us on ye old Thursday episode of the program. First, let's go out to a quiet, a sleepy, some might say a tranquil hamlet of Chicago. where we are joined once again by the unclest of Mike's, fresh off his coast-to-coast extravaganza, but now he's back, he's home, he's settled down for the rest of the year, and ready to watch these, I guess, green markets. We'll get to them all. He is Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show. I would say on this Uncle Mike type of day, but it seems like the worm may be turning, sir.
We will see, but there's always the option block effect. Whenever we talk, markets go up because that's just how we roll.
Well, it depends who's talking. You know, when you talk, they go up. When I talk, markets tend to rally. When the Rock Lobster talks, they plummet to their doom. So let's see if we can do that right now as we welcome on the Rock Lobster himself, Mr. Andrew GIOVINAZZI, from the dark and stormy, some might say terrifying shores of Maine, a.k.a. Option Pit. Mr. Rock Lobster, welcome back to the show. You think you can turn this worm today, sir?
You turn it dark and stormy. I don't know. I just have a lot of. We put it this way: there's been a lot of call closing the last from probably 2:00 yesterday till this morning. It has been a flurry of activity at the Option Pit closing stuff. So
getting the heck out of Dodge, living to fight another day.
I think what was he, the cheetah oh my gosh, I can't think of it right now, the guy that always sells premium, his name is eluding me, but option right now, calls you have are
you talking about Don?
Don, yes,
the cheetah. I've never heard him called the cheetah before.
Well, you know what, there was a broker on the Pecos floor that reminded me of Don. They're literally like they're the same guy. We used to call him the cheetah. So.
I can think of many adjectives to describe Don. Blazing speed is not one of them, but yeah, you threw me for the cheetah. So yes, options should be sold or not sold is what you're trying to say.
Correct. And today, whatever you own is a good day to sell them. So that's what I'm saying.
He's been requested. He might have him on in the network early next year. And I will have to call him the cheetah. And he just enjoy the befuddlement of his response. I do think.
Yes, I believe, though, the guy that was named the cheetah, the moniker was for another activity. So it was. Again, I'm reaching way back into my.
I do think, weirdly enough, one of his retirement hobbies is coaching track for kids. So maybe that does cross over a little bit. I don't know.
There you go.
By the way, you kind of just you threw me for a loop with that cheetah. But now let's keep on rolling. Speaking of throwing me for a loop, we're rolling out the old CBOE hot seat again this week. Our old pal, the Flow Master, on assignment. So subbing in, pinch hitting last minute is Kevin Carter, the CBOE product manager for the FT Options platform. Kevin, welcome to the Option Block program and indeed to the Options Insider Radio Network.
Thank you. Thanks for having me.
And Kevin, as we are wont to do with all of our first timers here on the old network, why don't you give our audience a bit of an overview of your background in the world of options and derivatives, as well as what the heck it is you do day to day over there at CBOE?
Sure. So I spent the first bulk of my career trading on the proprietary side, equity, we called it vol arb. So I did that for about 16 years running just larger long short premium books, and then migrated over to CBOE to work on a platform that I had used previously in my prop trading days, which was called the FT platform. And it's a fantastic platform, especially for those, looking for the third party solution, which I was years ago. And so that was it was a huge part of my workflow, and CBOE acquired it a few years ago, and that's how I ended up here to help build out some more tools on the platform. And as a former user, it's pretty interesting to see where it was on the customer side, where I'm at now. So I'm looking forward to building this out more and seeing how we can help these traders out there.
All right. I'm looking forward to seeing what's trading right now, because it looks like the worm might be turning, listeners. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading out there. And you know what happened yesterday in the markets, unless you were living under a rock. Of course, it is Fed week again, the final one here of this mad year that is 2023. Of course, I wouldn't put it past the Fed or one of the governors to try to slip something in before the end of the year at a meeting or a note or something, an interview. The Fed usually is never done, but at least officially on the calendar, they're pretty much done right now. And they came out of the gate just swinging. surprising a lot of people with a dovish tone, more dovish than a lot of people expected. Just a couple of weeks ago, Powell said, it would be irresponsible to speculate on rate cuts, something like that. And then 2 weeks later, that's exactly what he's doing. He's speculating on rate cuts, saying not one, not two, but three, perhaps coming down the pipe for us next year. So markets loving that, just shooting off to the races yesterday, up well over 1% in most of the major indices. It seemed like we were going to see the carry through and the carry over today. And we did early on in the session. S&P back north of that 4,700 level, listeners, blowing through it, getting up to almost 47.40 earlier this morning. It's like, 47.38 in that range. And then they came for it, drove it back down to around 47.20 before rallying it again up to about 47.35 right before we kicked off the show. And now it seems like the worm has turning. The S&P has fallen about, almost 20 handles in the span of just a few minutes out there, from about 47.35 or so right down to about 47.15. So, and a little bit below that now. So interesting. Is this just as the rally run out of steam? Have all the buyers been exhausted? They have no funds left to bring in? Or is this just a little bit of a pause before we just say, buy, gimme, more? One thing we all have seen over the last few years is it seems to be an inexhaustible supply of buyers out there. No matter what the news is in the market, they just want to buy this thing. So it could just be another pause out there before Uncle Mike resumes his buying. Either way, that's where we're hanging out right now. Slightly up on the day, 0.15% in the S&P, Dow up about 0.25%. NASDAQ actually turning towards the red, off about 0.25%, unless we forget our old friend, the Russell 2000. Again, that's why small caps are so fascinating right now. They don't give a crap what the hell is going on anywhere else. They're doing their own thing. NASDAQ might be down. Small caps are saying, nope, we're still up 2.5% right now. So, man, small caps have the bit in their teeth. Maybe we'll get to some more of that a little bit later on TWIFO. We'll be joined there by our good buddy, the once and future and now present Dr. Vic. Sounds like he has some cool trades cooking in the world of WTI. So we'll get to all that fun in a little bit. But all of that a long way around to saying VIX, when we kicked off the show, is at about a 12 even, down about 0.75 point. Of course, wait 5 minutes and that VIX level is going to change. Yeah, it's already closing in on 12.25 as we're starting to see the S&P start to turn to the dark side. So we shall see where we close the end of the show. VVIX at about an 82. That puts it unched from the Monday show. But again, I don't have a feeling we're going to be staying there for very long. VXX 1570 down almost 0.75 point. UVXY 860, so well below a 10 handle, even below a 9 handle now. Down 0.6 point from the Monday show. SVIX 3770. That has to be a new all-time high. Let's see, what is actually it got up to 38. 38.17 is the new all-time high. So my goodness, that thing has been on the rampage. Up nearly 2 handles, 1.7 handles. And UVIX 1420, down a little over 1, about 1.5 points from where it was on the Monday show. All right, a lot to unpack. As our guest, we will give you the dubious honor of going first, Mr. Kevin. Obviously, a crazy Fed rally yesterday. Today, we don't know. The jury is still out. What's been catching your eye this week and indeed today out there in the markets?
I'd say it's interesting as you have these big rallies. It's kind of like the last gasp. It always seems to catch the fallen angels, if you will. And it seems to me like that's kind of what we're seeing at the tail end here is a lot of the smaller cap, heavily shorted names getting that huge face ripper. And especially if you look at names like whether it's, RIVN, LCID, Unity, Wayfair, A-Firm, these names that have just, they 50-60% declines off the August lows have just, really turned around sharply here. And what's actually kind of interesting is, when I first got into this business, we were taught that as stocks go down, vols go up. And when stocks go up, vols go down. However, we have seen that has now changed quite a bit. And it could be because of positioning, most likely. But, you see today where the vol rips occurring, it's in these names. It's in these day 2 of the rally names where it's starting to be a significant 2-day move. And with that, it's grabbing vols with it. So, especially if you're looking at call overriding, today's the day if you're going to be opportunistic, if you want to overwrite in these names, because you've gotten a 2-day rip in the price and you've gotten a 2-day pop in the vol. So other than financials, it doesn't look like there's a lot of quality names in this rally today that lends that kind of long-term support, the big seven, or what do they call them now? The Mag 7. They're actually unched, if not down today, whereas the IWM is still, it's up 6% over the last 2 days. And a lot of those names are kind of unchanged. So you are seeing that decouple where, is this the last gasp where we're going to rally all these, I don't know, GMEs of the world, and that's our last rally until we kind of soften? It could be. I mean, it's usually an indicator. So I'm paying close attention to that just to see how we kind of pass the ball here, because right now it's firmly in the small cap, heavily shorted, massively beat up names. So I don't know if that's catch up or if it's a regime change, to be honest.
The old upside vol crash. I lived through a few of those in my day, out in the S, but yeah, you're right. Could be an interesting time to overwrite some premium if you got the bullets for it out there, which is interesting. Yeah, it does raise a good question. Is this the last gasp? Is everyone just exhausting all of their resources? When we're talking about the last gasp with the bulls, we got to go out to Uncle Mike. He is kind of the reigning king of the bulls out there. He never met an S&P level he didn't want to buy, let alone north of 4,700. He says, north of 4,700, I need to buy more. I need to buy 2x. So, Mr. Uncle Mike, what do you think, sir? Is this the last gasp of the bulls, or is this just, a pause before the next upside buying frenzy continues, sir?
Yeah, come on. We need that 1,000 lot bought right now. Oh, hey, sorry, Mark. Anyway, yeah, I think right now, we are at the precipice of seeing if we actually are at our last gasp or not. The level with which our all-time highs, just looking at SPY, for example, SPY 479.98. So let's just call it 480 we'll round up to that on SPY. And with SPY right now at 471.21, high of the day, 473.73, we're getting close to the all-time highs that we had just under 2 years ago. And that's definitely a point of resistance with it. Now, if we can break that, then, well, we're at all-time highs again. But we're at a point now to where we've come down off of the all-time highs. We're by the early January of next year, we'll be at the 2-year mark since we've had all-time highs. And so I think that's the mark that's the key number with which we have to get above. Now, in terms of what I'm looking at right now, with the bonds rallying just insanely like they have over the last couple days, since the Fed made their announcement yesterday, I've actually gotten to the point in the bond world to where with like LQD, for example, up nearly 3% off of in the last couple days, or roughly 3%, depending on what time frame you want to look at it. I'm actually selling some calls right now on our bond positions, and I haven't sold calls in a long time with this type of, I shouldn't say I've done a few little quick ones, but like in terms of the juice with which I'm selling, it's giving me opportunities to pay for calls with which I've been buying, and just definitely looking to have a more protective mindset right now in the bond space because of the fact that we've just rallied so hard. Now, could we rally more in the bond world? Yes, absolutely, no question about it. However, if there ever is a time that you want to sell some calls after a rally, I think that depending on your position, your objectives, and that type of thing, today might be a day with which to consider it, especially in the bond space. You're still getting a good dividend or some good income on your bonds, and if you can sell some calls on it, you don't want to sell on the down days. I like selling on up days. And that's what I'm looking at right now. In terms of just some individual names with which we're following, of course, Apple is down a little bit on the day-to-day. Not a huge amount, but it actually is down to where that seems to be national news these days. If Apple's actually down, that's just like a crazy thing. Microsoft, old Mr. Softy, that's having a 2% drop on the day. We're actually in Microsoft, but we have calls sold on that. We're pretty deep in the money on our covered calls, so I can't say it really bothers me that much having Microsoft down like it is. But with it, ultimately, the big question, in my opinion, with markets where they are right now is the all-time high number. And are we going to make a run at that? We're roughly 2% away from it. But right now, the market doesn't appear to be making that run this week anyway. But Santa Claus still could come to town. We will see.
You just said it, Uncle Mike. Apple is red. I think we've firmly established on this show the market cannot be green if Apple is red, correct?
I don't see how it's possible.
Not humanly possible for people to buy the rest of the stocks if they're selling Apple. It just can't work that way. As we go on out now to the shores of Maine, where he's busy unloading everything with both fists. He's saying the worm has turned. That's it. I'm bailing on everything. Mr. Rock Lobster, sir, what's been catching your eye? First off, what were your thoughts on I think even for the bulls, a surprisingly dovish Fed, the market response, and then now what we're seeing today, maybe running out of steam, or maybe just a pause?
Well, I was looking. I mean, so here's the market has been waiting for the Fed to basically stop saying they're going to raise, and I kind of think Powell was sort of there in October. That was the bottom, right? So when we launched, it was like, okay, everybody got a kind of the sense that they were done for whatever reason. Then we had a couple of sketchy bond auctions. It gave the market a little flutter, but for the most part, after that October, things were kind of ugly there. It was like, okay, the Fed doesn't need to raise anymore. We've killed inflation, so we rally. And as Kevin was talking about, when I started in this business, stocks go up, vol goes down. That's until the Fed came and wrecked it all in 2008 by all this insane QE, craptastic liquidity stuff they've done, which will all be proven it was a waste of time and money anyway. But with that rant being aside, that the Fed jumping in like that has caused the upside vol, in my view. Like for the first 20 years trading, I don't remember. I've had like 3 ramps in my life that I could remember. 2 of the biggest were when we went into Gulf War I and Gulf War II. Okay, so I'm just dating myself a little bit. But okay, and then we might have had another one somewhere, who knows. And then after 2008, as the Fed started doing this QE stuff, like the upside vol, save for the COVID thing, and I guess in 2018, we had that kind of tech wreck at the end of the year, I believe, something like that. But like the big vol has been like I would call daily volatility has been on the upside when the Fed has jumped in. So at this point, here's my question: is if the Fed is done raising, which I think most people agree on at this point, are we going to start seeing more upside vol like we've seen at this point? Because I think the bond market is determining where rates are going to go. The Fed could say they're going to cut all they want, but the reality is, if they're still trying to sell $1.5 trillion in bonds a year, I don't see how low rates going to go, because we're now at the point where that's kind of a big number every year, especially with sort of the other G7 countries kind of getting deficits down and stuff. So I would say that what's interesting is I wonder if we revert to a more normal market structure because the Fed is, quote unquote, getting out of the insane liquidity game that they have been in for the last, 2009? When did Bernanke start all that nonsense? 2009 or something? So yeah, 14 years of like massive expansion in the balance sheet and the national debt for, I guess there was a return, you could say, but no politicians have done great. None of them have done great with it. And now we're sitting on it. Again, I don't know when it'll be a factor, but I think what should happen is that upside vol should subside somewhat. But again, that remains to be seen. If people still think the Fed is going to be active, maybe go back to a QE, even though they said they had no plans on changing that. So I think they're still reasonable, but maybe we just might see like stocks up, vol down again, because like the upside is going to be earned the old fashioned way instead of just by financial shenanigans that makes, the algos rip everything up 1.5%, 2%, for basically, for nothing. So I think, and we're in a very normal looking VIX curve at this point, save for the December anomaly from the holiday. But it appears that we're going back into that mode. So we'll just see what happens. Now, the other piece of the puzzle is the valuations on all the top stocks in the Q world, the Magnificent Seven riding the AI thing. So I think the AI thing will be big. It's kind of like, I kind of feel like it's like 1850 or 1840, 1830, whatever. The first, 5 years of the railroads, right? Nobody had any idea how that would transform a country. It was huge. Same with the internet. Nobody knew how big that was going to be. And gosh knows how much value that has created. I think the AI thing is a huge unknown. And that's why they've basically been reaching for any stock that could benefit the most from it. And I don't know where that goes. So I'm not totally convinced the Q stocks, the Magnificent Seven, are going to get smacked. Maybe they actually start producing more money. As hard as it is to believe, it's possible. So again, a lot of forces, but the vol curve's getting normal. And it does appear that the Fed, that crazy upside, should be coming out of the Fed actions, in the short term. So I would expect, I know it sounds nuts, but I think we're going to see a 4 or 5 year low in VIX in the next, probably, I think even this year within the next month. So there you go.
AI could be the next railroad, says the Rock Lobster. Interesting. Quite a strong statement, especially for you, sir, who I know doesn't say such things lightly. So intriguing stuff. Someone's been playing around with a little chat GPT since the last show. Like, ooh, I like this thing. I like this. This is fun. All right, let's see what other kind of fun we're having out there in the market. And spoiler alert, listeners, as I can't even keep it together. There's so much action going on out here. Spoiler alert, it is a banger of a day out there. I'm hard-pressed to think of another day where we've seen this much action this soon in the session. The Fed is bringing it once again. Probably was the last Fed day. But even then, I don't know if we were on this level. Right now, listeners, let's start in the major indices and work our way through. In honor of the Flow Master, we'll fire up his trade alert platform, see what's popping off out there today. And yeah, it's a lot. 495,000 contracts on the tape already in VIX, so just a tick under 500,000 contracts. The ADV already starting to recover from its seasonally light lows around 640 or so. It's back up to about 700,000, and we might hit that by the end of the show at this rate. VIX is on the rampage. You think that's impressive? Wait till you see the other broad indexes, listeners. SPY, 6 million contracts on the tape already right now. Normally, decent day, we'd be at somewhere between 4.3 and 4.5 right now. 6 million already. And the ADV is a little over 7.04. So yeah, we're going to hit that probably by the end of the hour. The S, man, these numbers are bonkers, I think is the technical term. The S, 2.86 million contracts. It was not that long ago. It was about a year ago. Well, we saw the S at 1 million contracts right now. We'd be saying, oh my God, this is a banger day. Strap in, something's happening. Now, nearly 3 million contracts. Again, that just shows you how much this product has transformed just in the past 12 to 18 months with the advent of these 0 days. It is a completely different game. 3.05 million contracts is the ADV. Probably going to be there by the end of the show, if not sooner as well. I won't even insult you by running our usual test of how many of the top 20 are 0 day. Spoiler alert, it's going to be all of them. Small caps, not to be outdone. My goodness. We were saying for a while, is 1 million ADV in IWM really sustainable? Usually the answer is no. That ADV comes back down. It got up to about 1.37 million recently. That's a hell of a lot of paper. It was even struggling to hit it on our last show. Today, blowing right past it. Not even looking at it. 2.11 million contracts already. Already well north of the 1.37 million and on pace to do more. So yeah, today is a banger of a day, listeners. And the Qs, not to be outdone, 2.72 million, the ADV 3.32. That's a little less impressive because the Qs can be somewhere in the north of 2 million range pretty easily at this time of the show. Maybe not 2.7, but still. It's no small caps, but it's still impressive in and of itself. Speaking of impressive, listener, let's get out to the single names because, man, we've been talking for a while. Is it a banger day in the single names? And usually when we see this much, well, we haven't really seen this much in a while in the indexes, but when we see anything close to this much index paper, the small caps are kind of the single names are more of an also-ran, a forgotten stepchild of the market. Maybe it cost $180,000 to break into the top 10, maybe 200K if you're lucky. Today, 367,000 contracts is what it cost you to break into the top 10. I'll have to go back and crunch the numbers, but that might be the most we've ever seen in terms of how much volume it cost you to break into the top 10. There are many days just recently where you had that much volume, you were at number 3, the top 10. Today, that's the bar. That's the limbo bar that you have to cross just to get into the top 10. So my goodness, what a day. That gets us to Rivian. Rivian on the rampage today, listeners. 22 and about a quarter, up $2.50, nearly 13%. So they are feeling the love of a lower rate environment, apparently. Intriguing. And unlike everything else today, doesn't seem like they have turned to the dark side. They are mostly still up. So a nice little pop for Rivian coming in at number 10. Number 9, 1999 call. They want its name back. It's Intel. Number 9, 431,000 contracts on the tape for Intel. Unlike Rivian, Intel seems like it caught the animal spirits of the market, and now it's given up the ghost. It's at $45 right now, up about half a buck, but it got as high as about 47 and change earlier today. So it's given up $2 from that high. It's coming back down to pretty much unched, actually, on the day now. So yeah, so unlike everything else, at least unlike Rivian, which is managing to continue its rally, not so much out there. In Intel, Microsoft, Uncle Mike was just talking about them. They have certainly come for it. It's off about $4 right now, or about a little over 1%, trading 365 and change. On the week, though, of course, in this Fed rally, got up to about 375.5. It's down about $10 from that right now. And we're below, actually, right now. We're below the lows of the week. We got down to 368. So all of this Fed rally is now gone. We shall see if this is just some more reallocation. I mean, obviously, Microsoft's still up strong on the year, but seems like some folks, at least for right now, taking some Microsoft off the table. Number 7, keeping it in the large techs, it's the Amazonian. Number 7, we're already north of 500,000 contracts, 508,000 contracts on the tape. 146.40 is where it's trading right now, down about 240 right now, just ticked up a little bit out there. So yeah, Amazon kind of looks like they were trying to fight it, but they just had a big sell-off in the last, from about 148 down to about 145.70 before stabilizing a little bit just in the last half an hour or so. So they're turning with the market out there. Number 7, 508,000 contracts. Number 6, this is one of our newer additions to the top 10. It started popping up back earlier this year with all the contagion fears. It is back again. It is SoFi, 584,000 contracts, trading $9.34, up about 40 cents. So a nice little pop here for SoFi today. Again, good for the number 6 spot. Number 5, keeping it in the financials. They all like a little lighter rate future. It's Bank of America, 33.86, up nearly $2, about $1.80 right now, or 5.6%. I'd be coming back to this name a little bit later, so spoiler alert. Number 5, 611,000 contracts. Number 4, listeners, it's the Me Too of the AI world. Hey, we got an AI chip too. It's AMD, 677,000 contracts, selling off a little bit today, off about $1.60. Or about 1.2%, trading right around 136.5 right now. Good for the number 4 spot, 677,000 contracts. Number 3, right behind them, it's the usual tip of the AI spear. It's NVIDIA, 737,000 contracts on the tape. Also selling off today, 476.63, off about a little over $4 on the day, not even a full percent. And again, good for number 3. Number 2, you know what it is by now, listeners. You've been listening to the show. It's the fruit company. We're just joking about them. They can't catch a bid today. 197.17 right now, off about 80 cents. They were as high as, man, they flirted with 200 earlier this morning. 199.62. So they were at an all-time high earlier this morning, just a hair below $200. Doesn't seem like that long ago. We were talking about potentially writing puts at the 100 strike in Apple. Now here we are, threatening 200 to the upside. So the worm turning a little bit today. Obviously, Apple's still looking pretty near just hitting a new all-time high today. So can't be too angry, the Apple holders out there. Good for 843,000. And the number 2 spot. I mean, number 1, you know what it is. If all these names are putting up paper, Tesla is blowing the doors off, and they're doing it yet again. 2.64 million. That's pretty much double what we normally expect this time of the day. 250 and about a half, up a little, almost $11, about 10.90. on the day. So a nice pop here for Tesla. They've been rallying pretty much all day. Looks like they're finally just started to turn. They got up to about 253, almost 254 before starting to turn today. So they're starting to turn a little bit to the dark side too, but they've been feeling the animal spirits of this rally out there as well. A lot to unpack. In fact, we got a lot to get to on the show. We got to get rolling. You guys know what's going on in the earnings front. If you want to see that data for yourselves, theoptionsinsider.com is the place to go. Click on the Options, News, and Articles tab to begin your journey to the dark side as we continue our journey right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Let's dive on into the world of the Odd Block, see what weird, wild, and unusual paper is lighting up our collective tapes. I don't know, Mr. Rock Lobster, I have a feeling, I don't know for sure, but I have a feeling we're going to be talking about some size upside call buys. You think you can handle that today, sir?
Well, you know, it when in Rome, yeah, it would not surprise me. I think, yeah. Are you paying some off today, or are these newbies?
Oh, these are all newbies. There's too much paper to do payoffs today. We'll save the payoffs for the quiet 160,000 contract days. Today is not a payoff day, Liz. We could do 5 hours of Odd Block today if we wanted. Let's just dive right in. Kevin, I'd be curious to get your thoughts on some of these as well. You got to do your best Flowmaster impersonation, so I'll expect you to make your voice very nasally. Maybe shave your head if you can before the end of the segment. Should be fun. But let's get out right now to a name we haven't talked about in a little bit. It was lighting it up earlier this year, and then we kind of haven't talked about it since. This is Goodyear Tire and Rubber, ticker symbol GT, trading $15 even right now, up about half a buck, a little over 3%. On the year, you know the deal. It's been a pretty good run for Goodyear. It was trading a little bit shy of $11 a year ago, so they're up a little over $4, about 38% on the year. Even if they are off their highs, they got up to about $16.50. That was back in August, which was pretty much the last time we talked about them back in their earnings, and that's when they reported a third straight loss in their earnings. Stock took a good drubbing down about 16% that day, and it hasn't really recovered until recently. This November rally lifted all boats, including Goodyear, from about $12 and change up to where it is right now, back to $15. So they can thank the Fed for recovering a lot of this out there. Also, they announced, like everybody, some cost cuts out here. So that seems to be helping turn the worm. So Goodyear back up on the year. And what do we see out here today? Mr. Rock Lobster, surprise, surprise. Somebody is buying all the upside in Goodyear. This time they're going out a little bit, though. They're going out to April. They're buying the April 16s. They paid $1.05 for these bad boys 10,000 times, so they're not playing. This is about a 39 vol. The stock was right around here when they put these up, a little bit shy of $15. So no huge stock pop since they traded, but overall pretty optimistic view. They're not getting these calls for nothing. They're paying $1 on $15 underlying. So that's a decent chunk of change to lay out. Worth noting, they're going all the way out to April, so they are getting an announcement between now and then. The next announcement is on February 15th, so that's going to add a little bit of juice to the equation as well. Mr. Rock Lobster, we'll start with you, then I'd like to get Kevin's thoughts as well. What are your thoughts on some not cheap upside here in Goodyear Tire, sir?
Now, as I recall, we highlighted a buyer of calls a couple of months ago, I think. I even put a trade on around it. I think I sold the 10 puts. I did the risk reversal, it made actually some pretty good money. Was it an activist investor or something that was trying to, kick the tires, so to speak? So yeah, I don't think this is a bad purchase out to April for $1. Yeah, I think it's a totally reasonable purchase. Also, it passes the day one sniff test. You buy your calls and they're up the first day. You can't ask for a whole lot more than that buying options. So yeah, I don't think this is an unreasonable purchase, especially for companies that basically are profitable that the market just decided to hate. This is the tires are an old franchise, and I would expect if inflation starts to calm somewhat, their cost of goods is going to become a little more reasonable. So, yeah, I think this is a totally reasonable trade here.
I went and looked while you were talking, sir. It was back late summer. It was July 27th episode. We talked about someone coming in and scooping 8,047 of the AUG 17s. They paid 50 cents back then. Those were no bueno, sir. The stock at the time was $16.18. It took a drubbing. It closed at $12.66 on August expiration. So I haven't looked to see if they were still open. I'm going to go out on a limb and say no bueno on those. So maybe they're looking to recover.
That was an ouchie, because I remember it did cause me to put on that risk reverse, I think, and I made a little money on that one.
If you sold the 10 puts, you did all right.
Yeah. I sold the actually I sold the 13 puts and made money, if you can believe it.
Oh,
I sold the 13 puts and bought the 15 calls for a credit. And I'm just looking at my P&L. I actually was able to sell the 15 calls for money. And the 13 puts I bought back as well. So I put it on for credit, took it off for credit. So I used that person, but I did not get aggressively long the underlying.
Always good to get paid to get in and to get out. Mr. Kevin, sir, have you noticed this size upside in Goodyear Tire, and do you have any thoughts for us, sir?
I have. I mean, you guys are pointing it out, and I certainly see it. I mean, it sticks out like a sore thumb today, no doubt. And, I mean, looking at the vol itself, it's not like alarmingly high at all. So, I mean, it's still pretty affordable in that regard. And I mean, this is actually one of those that's coming from a rather depressed implied vol level as it is. From a trader standpoint, usually you like to get in the mix with this type of trade. I mean, especially if it's a vanilla buyer like that, you almost love it because it's almost a everybody can win situation if it works out, where the call buyer could win and the person selling the calls neutral can also win too, as we track towards that short strike and vol soften. So I always love finding these big block trades, especially in this kind of name. I'm not crazy about the vol level from a selling standpoint, but it's definitely something to keep a note of. I'd like to see day 2. I'd like to see it happen one more time, and then I'd really like to sell them personally.
You're all about selling the upside. I like it, Kevin.
I'm all about selling every option, by the way. Just the full disclaimer: you got to stick a hot poker in my eyeball to make me want to buy one.
Is he Don Schlesinger's forgotten love child here, as you referred to him, the cheetah, Mr. Rockloffer earlier?
If I'm ever paying theta, I mean, somebody punch me in the face.
Wherever Don is right now, he is smiling when he's hearing those words. All right, we'll see if we can.
That's where the money is.
We'll see if we can. You're not going to like the rest of these then. Spoiler alert. As we keep on rolling, let's get on out to the financials. Folks feeling a little renewed optimism out there post-Fed, it seems like. Bank of America, we were just talking about them, popping pretty hard today, up nearly $2, or about 5.75%, trading almost $34 right now. And on the year, it's kind of been a saga. A year ago, 32.25. Then they rallied into February, like a lot of names did, 36.5. Then we all know what happened late February into March, all that contagion madness. Strangely enough, that wasn't the low for them of the year. They got down to about 27 and change. Then they rallied it through July up to about 32 and 2/3 again. Then they actually exhibited their low for the year, actually back around Halloween, a little bit shy of 25, 24.96. Ever since then, though, it's been straight rally mode, including up another 16% just in this past month. So a nice rally for them from the lows, trading a little bit shy of $34 right now. And once again, Mr. Rock Lobster, somebody feeling like the upside shall continue. This time going out to Jan, so not quite as long term as our last one. Going a little bit more out of the money, though, going out to the 37 strike. Again, 10,000. That's our number du jour. 10,000 of the Jan 37s for 19 cents, just saying, gimme, gimme, gimme. These, unlike the other ones, though, are looking better. They bought them when the stock was 33.30, so they've had over a half a buck in their favor on the stock. So these are looking pretty decent. And there are earnings, actually, as well. They do get earnings. They're on January 12th, so right before expiration. they get an announcement as well. So that'll keep a little bit of life in these calls as well, which is interesting. Kevin, we'll start with you these times. We're learning a little bit more about your preferences in that. Would you prefer to sell or not sell these, sir?
Well, I'll say this. I mean, I think volume is always good to interact with. I think that's where I always usually start when I'm looking for my trades, because I think that that's going to move either implieds or give me some sort of indication on direction of the name. So I usually use volume as that kind of, first way to check for the smoke. So yeah, like in any of these examples, whether someone's buying 10,000 blocks and versus very little open interest, it's certainly something to take note of, because it's either a directional trade on the other side, or it's a stock replacement if it's a call. But I think, the more you can understand the volume and get a feel for it, that's where you can pair vol trading and directional trading together. And I think that then you can make those options work for you, whether you want to sell them or buy them. But I always want to play with volume. I would rather do that because I think that I'm going to learn more about what's happening rather than trying to find, more one-off, maybe more higher theoretical edge trades. So I don't know if that answers the exact question, but that's kind of where I am at on volume.
Interesting. Mr. Rocklops, the same question for you, sir. Are you down with a little bit of these Bank of America calls? They passed your first sniff test, getting a $0.50 to the good in the stock, sir.
I mean, buying out of the money calls, as you know, is not my favorite road. It's not my favorite, although I can see why people did buy them. But but at the same time, they paid 17 cents for 19 cents, and they're already up like almost a dime on them. So it's passing the first test of, oh my gosh, but it's passing the first test. Although, is it my favorite trade? No. It's outside of the straddle value. So that's another thing. It's like, oh my gosh, buying calls outside the straddle, my head starts to melt. But it's a bull market now. So this stuff might work. But generally, it's a graveyard where all these calls go to die. But as of right now, it looks pretty good. I would prefer the Goodyear trade over this one, though, for sure. But it's a cheap shot. Relatively easy to finance those calls if you sold something in the short term against it. So, but it's not my favorite trade, buying out of the money calls like that.
All right, we got a boatload of upside calls going up in all the financials. Let's shift gears, though, for our final one, because we're coming up against it here already. Time flies when you're having fun, listeners. Let's go out. Were you thinking size upside in grocery store chains? Probably not. Albertsons is where we're drilling in right now. I don't think we've talked about this one before. We talked about Kroger, some other chains, not Albertsons. Ticker symbol ACI. Trading $22.60, up about 16 cents today, about 0.75%. On the year, been a decent year for them. They were about 20 2/3 a year ago, so they're up nearly $2 exactly on the year. Their high actually came in early September of about $23.88, so they have retreated from that, even though they did recently sell off back to about $21, so they have recovered from that as well. So kind of a little bit of a topsy-turvy year here for Albertsons, even if they are up net on the year. And Kevin, we'll start with you. This is another one, more upside love. Everyone's just feeling the old animal spirits of the market right now, because once again, they're going out to April. This time they're buying the April 25, 6,250 times. This one a little bit weirder though. So I can maybe hear an argument, because this market is an atrocity, 20 cents at 120, that maybe this is a bit of an override. I'll have to go in and dig a little bit more. The stock was exactly here, 22.57. There are earnings, obviously, between now and April. The next one is on January 9th. So, Mr. Kevin, this went up kind of almost split in the uprights at 80 cents. You like it better as a buy or a sell, sir? Even though I have a feeling I know which way you're going to go.
I mean, honestly, based on the market width here, which is awful, 70 cents at 120, this is a pretty roachy endeavor here, meaning that you better love whatever you get on in here, because it doesn't look like it's going to be easy to exit if you don't like it. in terms of the width of this market. I'm not real sure what's going on here. I'd have to do some more digging, to be honest, because it's very suspect volume from my standpoint. It does pair with these Jan 2025 puts that has some other hefty open interest, but it's hard to figure out what is actually occurring here. And again, this is, I'm a seller normally, but in an option that I would have a hard time transacting in and out of, in a name that I don't know very much about, and in volume like this, which could be some sort of, someone preparing to take something out, I'd probably just pass altogether on this one.
Yeah, I'm looking here while you were talking. They went up 6,250 times at 80 cents. Like you said, an atrocity of a market, a roach motel. You can get in, but you can't get out. Looks like about 2 hours later, the market was narrowed down to 65 at 75, and they traded at 71. So I'm guessing they were hitting some bids earlier on, or at least they were selling them around 80 cents. So it could be an overwrite, even though, again, these markets are an atrocity. Probably like it a little better that way. But again, Mr. Rocklopsy, you get the final word, sir. What do you think they were up to here? And which way do you prefer it?
So hold on, was this the ACI calls? I'm sorry.
Yes, the ACI.
Yeah.
We're skipping the other. We'll save those for oddities.
Yeah. You know what? I'm thinking that this was a purchase just because it goes with the theme of the day, so to speak. Because I don't see a liquidity provider paying 80 cents for these. I think they do make a much better right. But what does the Flowmaster have on these ones? Opening, are they saying opening buy? Yeah, I like, it's sort of like, grocery store stocks buying out of the money calls. It makes me want to hide under my desk.
Yeah, it doesn't excite me at all.
Yeah.
I don't think Albertsons
It's good to have like an old market maker trader type on here, because he sees stuff that's too expensive and he just like he wants
don't sleep on the go with trade.
See, sold with. Where can I sell?
Now that we've said that, watch, this is the next meme name and it explodes to 200. They can't get enough of Albertsons, but
gosh, what was that one? What was that one, Mark? The
Men's Warehouse,
the clothing outfitter
Men's
guy.
Warehouse, yeah. We talked smack about that ridiculous trade, and they ended up printing money on both legs of it. Yeah, that was a good one. That was a fun one. That's an all-timer. We'll see. Maybe we have some all-timers hitting this year as well. We shall see. As we keep on rolling, listeners, we don't even have time for the mail. We've been having too much fun here. Let's just go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until our next episode on Monday. It's time to wake up Uncle Mike with a couple of smacks to the face. We want to see what he's keeping an eye on. Also, let's get another tilt at our question of the week right now. Our question of the week, listeners, you can find it over there at Options on the old Twitter/X. It's a in the weeds kind of question, so if you don't feel up to answer, I get it if you're not a vol trader. But we're asking you, does SVIX adding VIX options into its holdings, in particular VIX calls, does that make you more or less likely to trade it? Gave you three choices. More likely because it's safer, less likely because the tracking is worse, or you're still gun shy. You got burned back in 2018 with XIV, and you ain't getting back into an inverse vol product. Okay, there's no right answer here. We're more just kind of gauging your sentiments. Uncle Mike, I know you don't love the vol ETPs. If you have a guess as to which way our audience is going, have at it. And then B, what are you keeping an eye on for the rest of the week until the Monday show, sir?
I mean, to me, it would make it less likely because it just the tracking. I would be concerned about the tracking, but I'm not likely to do it anyway, so I really can't be much less likely.
Yeah, I was going to say, does that go from a 0.05% chance of you doing it to like a 0.025?
Yeah, it's about somewhere along those lines. So yeah, in terms of what I'm watching the rest of the week, we may have topped out today, so we'll see if that actually happens in both stocks and bonds. So watching to see where we can go with it, to see if we get some type of Friday rally or if the sellers are going to head for the exits. And Apple 200, Apple got to 199.62 as its high today, and it could not cross the 200 mark. So continuing to watch that because Apple's kind of in line with the market a lot of times.
All right, listeners. Yeah, I should give you an update where we stand at the end of the show. I said the worm might turn. Looks like it has indeed. The S&P is now red on the day, off about 0.15%. The Dow flirting with unch, going to turn red. The NASDAQ off about 0.5% right now. VIX tilting up to about 12.5. The first sign that VIX is going to rally, listeners, is, of course, I have some vestigial VIX puts in my back pocket post-Fed. So, of course, those are going to turn against me. So I am single-handedly driving the VIX back up. Mr. Kevin, I don't know if you watch the universe of vol ETPs, but if you have a thought on our question of the week in terms of does SVIX messing around with their holdings a little bit and incorporating VIX options, not just VIX futures, does that change the game for you? Have at it. And then even if not, more importantly, what are you keeping an eye on for the rest of the week until next Thursday, sir?
Yeah, I mean, I'm in the same camp. I'm very unlikely to trade that name. Just because of the tracking, just because of all the other nonsense that has occurred in those things over the years. It's just no bueno for me. But as for the next week, yeah, I mean, I think we're just going to see this week digest itself and how that goes. I mean, the Santa Claus trade is certainly real, and he usually comes to town. So I don't think we're going to puke after this rally in the near term. I think it'll probably hold firm and trade sideways, if not continue higher. I mean, it's got seasonality to it. So, and then buckle up as you get into January. That's kind of what I'm thinking.
Well, my puts expire next week, so VIX is going to rally next week. Yeah. And then, of course, it's all bets are off.
Okay.
All right, Mr. Rock Lobster, you get the final word, sir. And in fact, we're coming up against it. So what are you keeping an eye on for the rest of the week? Does the SVIX change make you more or less likely to trade it? And where should folks go if they want more Rock Lobster in their lives?
I do trade it. I just like it because it is my short premium trade. I just buy calls in it and I pretend that they go up. So I do kind of like it when all the weirdness intrigues me, I guess. So I'm watching that. Yeah, and I agree with Kevin. I don't think we puke. I think I think if the crazy upside is done because the Fed's just going to be done and be actually just stop doing stuff, that generally is bad for vol, and I think we need the rally to settle. So again, I don't see us going down a lot, but I do see some stocks catching a bid here in the end. Maybe I would just say sector rotation. I'll use the CNBC term, sector rotation, I think.
How nice of you. And where should folks go if they want more Rock Lobster goodness?
Yeah, go to optionpit.com. All of my products, all 5, are making huge money this year. My students are happy, so what the heck? Optionpit.com. If you want to learn how to be a retail trader trading vol, come to optionpit.com. There you go.
And Mr. Uncle Mike, if folks want to get at you, maybe schedule a road trip to their neck of the woods, where should they go? What should they do?
Check me out. Follow me on Twitter at Mike TOSAW, TOSAW, or come to my website, stcharleswealth.com. Sign up and I'll give you a call.
Look for his yellow VW bug showing up on your doorstep, listeners. Kick off the journey over there. stcharleswealth.com is the place to go. The Uncle Mike Mobile showing up at a town near you. And last but not least, Kevin, where should folks go if they want to check out the Flow Masters tools for Trade Alert, your stuff, FT options, live vol, and all the cool goodies you guys got cooking over there in the land of the CBOE?
Sure, yeah, that'll be cbo.com/RMA, and you will see all of our offerings there. Come on down.
There you go, cbo.com/RMA. That's going to do it for us on the option block today. Not going to do it for us on the network, of course. No rest for the wicked listeners. I'll be back in a little bit with our buddy, the once and future Dr. Vix, the whole court on This Week in Futures options. We're going to break down everything popping off on the CME side of the fence. See what's lighting it up. Maybe energy, metals, rates. You never know what's lighting up this week. You got to tune in every week. I do have a feeling, though, he's got some energy in his back pocket, Mr. Rhodes, so we shall be talking about that. Then, of course, back again tomorrow to encapsulate a crazy volatility week with a little bit of the old volatility views. Who's going to join us tomorrow? I guess you got to tune in to find out. And then after that, exclusively for you pro folks, we're back again one final time for the week with a little bit of the old options oddities. And, man, we got some good ones for you this week, so stay tuned for that. If you're not listening to oddities, man, what are you doing? theoptionsinsider.com/pro is the place to go to get all that goodness. Then, of course, we're back again on Monday, maybe with some 80s wrestling in hand. Until then, have a good weekend and stay safe out there, everybody.
The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.